Today I want to talk to those of you who are going to be filing self-employed income taxes for the very first time. Whether you be an independent contractor or have started a small business, the first time you file those self-employed income taxes can feel a little scary and overwhelming. I want to talk you through exactly what to expect and a few important things to know before you file. Hi, my name is Jenny Silver. I am the founder of the California Entrepreneur Collective and a contributing author for Entrepreneur Media. First up, I want to make sure that you understand that I am not a tax professional. I am not a CPA. I am not an accountant. I do not work for the IRS. This is merely very important information that I have compiled based on information from the IRS. It is always best to take your questions and get your information from a tax professional and not someone on YouTube. But I do want to try to point you in the right direction by using some really important government resources, links from the IRS, etc., to point you in the right direction so that you are well informed. Now, the first thing I want to note is this video is not for those of you that have formed a corporation or who have elected S Corp taxation status. You would have filled out additional paperwork in order to do either of those two things. So if you did, then this video is not for you. This is going to be for sole proprietors, including independent contractors and small business owners, as well as single member LLCs. First up, it's incredibly important to have a few things ready to go before you file your income taxes. Whether you are using a professional tax pro to file those income taxes, a service or a software, or you're doing them yourself, make sure that you have these things in place first. Number one, you're going to need your business financial records. As a business owner or someone who's self-employed, you are legally obligated to keep business financial records. Now, the IRS is not specific on exactly what those need to look like. It can be something as simple as a spreadsheet, something that you do yourself, such as QuickBooks or Xero accounting software in order to keep records and run reports. Or you may have enlisted the professional services of a bookkeeper or a CPA. Regardless of how you choose to keep your financial records, make sure that you are keeping them. And if you haven't, make sure that you catch up before tax time. You are going to need those totals in terms of what you spent, where, and the evidence of that before you file your taxes. So if you did not keep them, make sure you catch up now. Next, you're going to need to have an understanding of what counts as qualified business deductions in your cash flow that went in and out of your business or your self-employment. There's a wide variety of different ways that we spend money in our business and our self-employment that is going to be tax deductible. When a business expense is tax deductible, it means that you can enter in that amount on your income taxes and it will lower your taxable income, the amount of your income that is going to be subject to be taxed. So you want to make sure that you have a firm understanding of what is and what is not tax deductible so that you can make sure that those financial records keep careful track of those business deductions. If you need more information on what is and is not tax deductible, I have a video about this linked in the video description down below. The next thing that you need to have ready to go before tax time is your 1099s. You may be obligated to either send or receive 1099 tax forms, depending on how you earned money and how you paid others. If you worked as an independent contractor for another business and that business paid you $600 or more throughout the course of the year, even if it was in separate payments, then that business is obligated to send you a 1099 NEC for non-employee compensation. Likewise, if your business hired independent contractors and paid independent contractors $600 or more per each contractor, then you are going to be required to send that contractor a 1099 NEC yourself. The deadline for issuing, sending, and filing that 1099 NEC with the IRS is January 31st. Ensure that you have waited until January 31st and ensure that you have received all of those 1099s before you file your taxes. There's a cat back there. You have those things ready and in place for your income tax filing. The next thing to understand is exactly how you will be claiming this income on your income taxes. You will be completing what is called a Schedule C. A Schedule C catalogs your self-employed income as well as the expenses and deductions that come along with running that business. Now, a Schedule C is going to be automatically included in your tax return. If you use tax software, if you answer the question that yes, you had self-employed income, or yes, you operated a business within that tax year. Additionally, if you're having a professional file your income taxes and prepare those taxes for you, then they will automatically create this form for you and include it in your tax filing. Just make sure that you inform them that you did have self-employed income in the tax year. Thing you need to understand about filing those self-employed income taxes is that you are going to be obligated to pay 3 different types of income taxes on your self-employed income. The first of these taxes is called self-employment tax. This is 15.3% of your net income. That 15.3% breaks down into Medicare and Social Security. Additionally, you're going to be obligated to pay your federal income taxes as well as your state income taxes. The taxes that you pay are going to be calculated on your self-employment income after your expenses and deductions have been taken out. This is going to be known as your net income. If you're operating an LLC, a limited liability company, you'll know that you are because you would have filed additional paperwork to form that LLC. Then you are going to be obligated to pay one additional type of tax. LLCs are obligated to pay an annual LLC tax. In my home state of California, this annual tax is $800. This occurs regardless of how much your business earned, if you had an operating loss, or anything like that. LLCs are obligated to file an LLC tax return, which goes through your state income tax filing. This additional return is going to be automatically included in those tax filing softwares or with your tax professional, but depending on the software, sometimes you do need to mail in that form separately, even if it is generated and filled in by your tax software. So make sure that your tax software is not only generating that LLC tax return, but also that it is sending it and filing it for you. And if it's not, make sure you print it and mail it yourself. You may also be obligated to send that payment separately, depending on what type of tax service you are utilizing. The next thing that you need to know about filing self-employed income taxes is that for next tax year, you may be obligated to file and pay estimated quarterly income taxes. Essentially, if you believe that you are going to owe a tax bill of $1,000 or more next year, then the IRS will want you to take the estimated amount that you think you will owe, break it up into 4 even payments, and pay those payments to the IRS quarterly in advance. The goal is that by next tax year, you do not owe any tax money. It is always best to overestimate how much tax you are going to owe, because if you overpay, you simply will receive a refund at the end of your tax filing next year. But if you underpay, then you are going to be subject to pay penalties to the IRS. It's also incredibly important to know that the first of these estimated tax payments is going to be due by April 15th on tax day. Now, this can be really tricky for new business owners and entrepreneurs because that means at tax time, you will not only owe this last current year's self-employment tax as well as your federal and state income tax, but you also will owe that balance for the first quarter of estimated payments for next year. So make sure that you plan ahead. Now, if you need extra time to file your taxes, know that you can request an extension. That extension request must be submitted by tax day, and it will extend your tax filing date until October. However, your payments for your income taxes, your estimated income taxes, as well as any LLC taxes that you owe are still going to be due, and those will not be extended. Lastly, and very importantly, many who are filing self-employed income taxes in their first few years find that they unfortunately have really underestimated how much tax they're going to owe, and they did not set aside enough. You can apply for an installment agreement with the IRS if you find you cannot pay your balance. The IRS will allow you to apply to pay this balance broken down into smaller payment increments, and signing up for a payment plan actually lowers the amount of interest that you're going to have to pay over time. So if it is a case of you cannot pay your balance and you are wondering if you should just wait and pay it late or if you should get an installment agreement, make sure that you sign up for an installment agreement in advance. Okay, you guys, let me know in the comments down below if you have any questions, and I will do the best I can to point you in the right direction.